Hello, and welcome to today's educational webinar hosted by Elliott Wave International and Beacon Learning Group. We're glad you're here. Beacon Learning Group is proud to be an Elliott Wave International educational affiliate. We're working on our second year of that relationship, which we are happy to participate with and glad to be able to bring you information on a periodic basis as we do. Today's topic is the top 5 Elliott Wave coaching tips from 2011, featuring Jerry Moss, our Elliott Wave certified coach at Beacon Learning Group, and also Phil Anderson, our program director. We hope you enjoy this presentation, and without further introduction, we'll turn the time to Jerry.
Good morning, everyone. As we start today, I always like to throw a little tip out, and the tip of the day is a trader gets paid to wait. We'd like to talk about coaching tips that we have discussed through this past year. To begin with, if you're going to be trading Elliott waves, the thing to do is to recognize the Elliott wave fundamentals. To begin with, I've put up a slide here that represents a motive wave as well as an impulse wave. It seems like everybody learns very quickly the rules that apply to an impulse wave. For example, a 2 wave cannot exceed the beginning of the 1 wave. The 3 wave cannot be the shortest wave, and the 4 wave cannot go into the price territory of the wave 1. And these are the basic elements that everybody learns. The biggest problem is that that's about as far as most people get with this. The success to be a good Elliott wave counter as well as a good Elliott wave trader is to be able to understand and learn all of the waves that apply to the Elliott wave and all the rules and guidelines that apply to it as well. If we go into the Elliott wave principle textbook that we use, on page 84 we find a list of the rules and guidelines that are give us the understanding of how to trade the wave itself. Without an understanding of the rules and guidelines that are found in this part of the textbook, it's literally impossible to be able to trade the wave. There is more to trading an Elliott wave than just trading the dynamic impulse wave. We have to learn that an impulse wave is part of a motive wave, but not all motive waves are impulse waves. And we can find other motive waves that are just as effective to trade as the impulse wave itself. I think these pages, these about 6 or 8 pages in the textbook, are probably the most important parts of the book. It's interesting, though, as we work with people, they read through parts of the book, and there are questions as to what different terms mean. And as we talk about them, we find that every paragraph in the book has important meaning. The textbook itself is a very hard read if you try to read it as a novel. But if you study it, you'll find important parts to understanding the Elliott wave in each one of the paragraphs in the book. It's an excellent textbook. Here's another type of wave, of course, that we deal with, and it's the corrective waves, the corrective side of the Elliott wave. Looking at this, it looks very complicated, and it is complicated until we start breaking it down piece by piece. Again, having an understanding of the rules and guidelines found in this part of the book will help people get a better understanding of how to take this part of the wave apart. And we have to take it apart in segments. For example, we obviously have to have a 3-wave count if we're dealing with a 2 wave. And we can break that down into a 3-wave count, but what do we do with the rest of the material that is here? How do we break that down? Of course, what we're doing is we're looking at lower fractals. And as we look at these lower degrees, we have to break these parts down to be able to support the wave that we are illustrating at this particular point. And it breaks down into another segment here, wherein we can break the B wave part of the overall pink wave apart. And likewise, we can break that down into two different segments as well. And by the time we get this broken down, it becomes very clear as the type of wave that it is. Unfortunately for most, it seems like corrective waves occur about 70 to 80% of the time. And these beautiful motive waves, or especially impulse waves, occur very, very infrequently. I believe it is possible to learn to trade the corrective waves as well. It's just that you can't take as much profit out of them, and you have to have an understanding. But if you can channel these types of waves, very often you can see very good trades develop in these waves as well. It's more of a scalping type situation rather than a long-term type trading situation. If you're going to be a good trader, I believe that what you have to learn to do is to deal with what the market gives you, not what you desire out of the market. The wave propagation is always up and down, never sideways. As you look at that wave that we were just looking at, you would say, well, that's a sideways move. But if you look at the interior of that wave, each wave is going up and down, up and down, up and down. Learn to trade both the range-bound type waves as well as the aggressive type motive waves. Only time moves sideways. Everything else in the market moves up and down. What are the wave count possibilities? First of all, you need to have an understanding of the importance of recognizing the formations of wave groupings. Let's take a look, and I've used this before many times, but if we can learn to recognize pattern development, by having an understanding of pattern development, then we can kind of predict what to expect next. It's interesting, as a motive wave develops, or as especially an impulse wave develops, we really don't recognize it as an impulse wave until it is complete, and by that time it's too late to take the trade. We have to be able to recognize when an impulse wave is going to develop, and we can do this by looking at previous pattern recognitions. For example, in this particular phase where we have a 5-count wave, which would be a motive wave, and a 3-count wave, which would be a corrective wave, we can apply possible counts to this. And if we apply the possible counts, we can see that in this particular instance, we have possibly 3 or 5 different counts to this. Now, the thing that is helpful as individuals, if you take these basic patterns, draw them out on paper as stick figures, and then add maybe a 3-wave count after this, you could go through the possibility of elimination as to what the count might be. Or if you add a 5-count wave to this, then you can also go through and eliminate count possibilities. And then after you do that, if you'll add another sequence to it, you'll find that eventually you can get down to the point where you recognize it as only one wave. And if you can recognize only one wave, then you can predict what the next wave will be. Another situation. Here's the same wave, except it's displayed just a little differently. Again, let's look at the possible counts that we have on this. And likewise, if we added a 5-count wave after this, we would be able to go through and eliminate some of these possible counts. Or if we added a 3-count wave to this, we could then therefore go through and eliminate some of the counts that we have on this, or some of the labels that we have on this at this particular time. Again, another sequence. And again, what are the possible counts to this particular sequence? Well, we may have an ABC. We may have a 1, 2, 3. We may have a 4, 5, 3, 4, 5. and we may have a CXA in this particular situation. Again, start adding another wave to this. Become familiar with how these waves develop. Again, follow the rules and guidelines as prescribed in the Elliott Wave Principle book. And pretty soon you'll feel comfortable in looking at these wave formations and these wave counts. And they will have meaning, and you can predict to some degree of accuracy what is to follow. Again, we take the same type of display, but we display it a little differently and apply what the possible counts might be to this type of situation. And I think in time, as you get very familiar with this, you will become very successful at counting waves. I find in working with people, the people that spend the time going through some of these basic patterns and developing the skill of being able to predict what is coming up in the future become very successful traders. Here again is another possible wave count. Of course, in this particular situation, we could have a C and a 1, or a 5 and an A, or possibly a 5 and a 1 in a turnaround market. Again, you start adding waves to this, and pretty soon you'll start eliminating some of these possible counts, and it gives you confidence in the next wave that will be developing. Another sequence, again, applying the counts to this. We have an AB or an XA, and then by again adding additional formations to this, pretty soon we go through a process of elimination, and it becomes much clearer as to what you are looking at as you're working with the wave itself. In order to be successful, we have to have a properly labeled chart, and this includes alternate counts as well. And as you can see, we could have, with those few simple displays that we had on the screen, you could see that we could have many alternate counts for just the two or three wave sequences that we had there. And as the wave advances and continues to advance, like I say, we can go through the possibility of eliminating some of these earlier alternate counts that we had. Notate trade setup conditions when they become evident, and be prepared to enter a trade at the proper time. Here's a situation where I think where if we look at this, and this is an interesting slide, I think, in the sense that the obvious would be that if we have an impulse wave, because there's no overlapping in that big wave coming down, and so therefore the way it looks, it must be a 3-wave, and therefore the next wave must be a 4-wave. But we didn't spend a lot of time counting, and if we count this, you'll notice that if we go through and count each one, I've got a 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 wave count clearly tells me that we're dealing with a corrective type situation and not an impulse type situation. If it were a 9 count, that would be a different story, but learn to recognize the just simple counts. Counting a long wave like that clearly tells you what it might be right off the bat. And in this particular case, it is not a 1, sorry about that, I forgot to turn off my cell phone. As we look at this, it clearly is not a 3-4 count, but it ends up as a triple zigzag, as an A, B, C, X, A, B, C, X, A, B, C, which of course translates into a W, Y, and Z wave. Now, the only way that we would find this is by going through and actually counting each wave that we have there, and by determining that we have 11 count there rather than a 9 count, we now know that we're out of the motive type situation and into the corrective type situation. Of course, these waves are made up by motive waves as well as corrective waves, but the sequence itself tells us what kind of wave situation that we're dealing with. This also prepares us for how we are going to analyze the waves that are developing into the future. Now, a wave that I like, and I have traded this, and it doesn't appear very frequently in a higher time frame situation, but if you go down into the very low time frames, you'll find this type of sequence develop quite frequently, and that's as a 5-5-3 setup. We begin this exploration process by recognizing the patterns and the counts that have developed in previous waves. You have to select the appropriate time frame in order for this to really work. And you'll have to look for pattern recognitions to the left of the potential developing wave. And you have to review at least 3 previous waves, if not more, in order to make this particular situation work. We have to be able to count the waves in each one of the phases. And we have to get a fairly clear count if this is going to work at all. We have to be able to identify a wave sequence for each phase. And in the process, there are opportunities for trading a 3-wave. Look back 3 generations, what are the parent waves looking like? In this particular situation, if I look back 3 waves, I could see a 3 count, a 5 count, and a 5 count as we look through this particular pattern. And that tells me that the next wave to trade will be a very dynamic wave. It looks like possibly a C wave. It could be an A wave possibly. It looks like a 1 wave. That can't be a B wave, so therefore that eliminates the A wave aspect of it. It looks like possibly a 2 wave because there's 3 waves there. And so therefore what would I expect on the next situation? Well, the structure here definitely would be a 5 count C wave, a 5 count 1 wave, and a 3 count B wave, or 2 wave. And as the structure outlines itself here, you can see that we do have a 5-5-3 setup. What would you expect for the next one? Well, I would expect a 5 count to follow. Now, is this a high potential trade? Obviously it is. And look at the wave that develops there. The development of this trade came out of the 5-5-3 setup. And with a pattern setup like this, the trade is saying, it's saying, take me, take me, take me. One of the problems that I find in talking to people is an understanding of stop losses. And especially trading in a market when the market has a spread in it, a bid-ask price. Now, very often when you're trading in a lot of the markets, you're paying a commission to the broker. But very often in markets that have a spread, you're paying the difference between the bid and ask price to get into the trade. And this spread will vary from market to market. And we have to be somewhat familiar with what that spread is. Now, this happens to be a slide out of the currency market, the Forex market. And of course, everybody knows that in the Forex market, we trade a spread. And these spreads can vary, and brokers actually advertise what that spread might be. Because I see brokers advertising you can get into the euro dollar for a 1-point spread or a 2-point spread. That spread is fluctuating continually. I think you should know that. In a highly traded, highly volumized market, the spread could be greater than the 2 points that they advertise. It could maybe be as high as 3 points. In a very slow market, on a very slow day, you might be able to get into a trade with a 1-point spread. That spread is continually moving. In this particular case, if I were trading this, and this is not a good example for a trade, but it is a good example for setting a stop loss. Let's say if I were trading this wave coming down, I would place a stop loss at the very top here. And a lot of people teach that it should be 1 point above the end of the wave. This is the fallacy that takes place with this type of a market. And this is where people often get stopped out unknowingly, simply because the market is, because of the spread that occurs. Now, if we're looking at this particular situation, in this illustration, the spread here is 4.1 pips. Now, maybe the broker advertises 4 pips, but in this particular volatility of the market, maybe the conditions are so that the spread is at 4.1 at this particular point in time. And it's changing so fast that you can't keep up with it. But in this particular case also, we will find that the bid price here is displayed on the chart. And if I have a 1 point stop loss here, the ask price will be here, but it's not displayed. But if this wave moves back up and actually does not break this, but comes very close to breaking this, and remember, if we're dealing with a 1-2 wave, a 2 wave cannot go past the end of the 1 wave, but it can go to within 100% of the 1 wave and still be a legal wave. But the ask price will go well beyond the stop loss that we have here, and it will be the ask price that takes you out of the trade. And you'll say, well, you know, it didn't break it. The broker spiked me out, and you'll blame it onto the broker. The reality of the fact is that you did not understand that it's the ask price that moved beyond and actually took you out. That's what spiked you out. So in this particular situation, what we have to do is we have to place the stop loss higher than what we intend to do or what we may have been taught to do in order to protect ourselves from the ask price moving into that particular part of the market. Every trader, before they enter a trade, need to have a checklist. A checklist is imperative before you trade. I come out of a business that required checklists. I spent a lot of years flying airplanes, and if you didn't follow a checklist, you may find yourself asking yourself, why did I crash, or something like that. Checklists were imperative. That it was a necessary tool that we had to use in the flying business. But in trading, we also should have a checklist. And basically, we should develop a checklist around different stages of the trade. In the aviation business, we had a checklist to taxi by. We had a checklist to start up the engines. We had a checklist to push back from the gate. We had a checklist that we checked before we entered the runway. We had a checklist on takeoff. And likewise, as you're going into trading, you need to begin with the market analysis, the prospecting aspect of trading. You need to develop a checklist as to what you're looking for as you're prospecting for the trade. Likewise, you need to plan the trade. You need to test it to see if the trade is going to go the way that you think it will. And likewise, you need to have a checklist for executing the trade. In other words, you need to be able to verify if that trade is going to work. You need to manage an open trade. You need to watch the rewards that are coming and be able to take the rewards off the table before the wave turns against you. It's exciting when a person takes the trade at the end of the wave and recognizes what the end of the wave is, takes the profit off the table, and then watches the wave turn around and basically would have eaten up the profit had they not gotten out. Or it's very dismal when the wave does turn around and you don't recognize it as being the end of the wave, and it eats up all of the work that you have done. And of course, you need to have exit strategies. You've got to be able to recognize when the wave will end. And there should be a checklist developed for this and the tools that you're going to use to exit the trade. Of course, we say one of the foundational tools is to be able to count the wave as it's developing. And that gives you a pretty good clue as to when the wave is going to end. But all of these checklists should be developed. And should they be developed in a standard form? No. They should be developed to your way of trading, your style of trading, your understanding of trading. And you should work towards developing a checklist that is meaningful to you. A 5-point checklist helps you identify high probability trades in the Elliott wave system. Review previously developed patterns, just as we've been talking about. Count at least previous wave previous wave phases prior to the wave that you're going to be trading. Validate wave counts by looking to lower time frames. Use the rules and guidelines that are found in the textbook. Understand the rules and guidelines, because as you use these rules and guidelines, you're able to support your identification of the waves. You're kind of like a detective at a crime scene. Using the rules and guidelines as you explore the waves, you're able to pinpoint and test certain elements that give you clues as to what the wave really represents. If you're not very good at defining the rules and guidelines, the wave is like a robber. It's going to take your money. If you understand and define the clues, then you can take the robber to jail, and you can gain the reward of what you're doing there. I think you sometimes have to look at real life as you're working through this. The wave does reveal itself. All you have to do is use the proper tools to define what the wave is really trying to tell you. Apply your observations to known patterns, and prepare to identify a specific point for trade entry. Let's take a look at a little bonus tip here. Trading psychology. A trader needs to trade with self-control. We have to master our emotions. Now, I said earlier, a trader gets paid to wait. Too many people come into the trading room and they want to trade all the time. And sometimes you should stay out of a trade and wait for it to for the wave to reveal itself better. Other times you may see by studying and observing and using the rules and guidelines, you may observe a condition that warrants you getting into the trade. You should need to ask yourself the question, did you come to the table to trade, or did you come for a trade? If we come to trade, that means that we're going to trade all the time. If we come for a trade, that means that we're going to take the trade when the trade reveals itself to us. Patience is a key word in this business. You need to ask yourself, what does the market really want me to do? What is the wave really telling me to do? Sometimes it tells you to stay out of it. And sometimes it tells you you better get into it, just as I was trying to demonstrate with that setup that we had just a few minutes ago in an earlier slide. You need to ask yourself, where's the sweet spot of the trade? I like to refer to myself as a jelly donut type trader. I want to take the sweet spot right out of the middle of the donut. And every trade, every wave has that sweet spot. And the secret is to get the sweet spot out of the trade and leave the crumbs for everybody else. Do I recognize any wave patterns as I'm doing a study of the wave? The patterns that tell me that the next wave is going to be tradable. These are questions that you should ask yourself. Now, when we talk about the physical and emotional state, obviously there are times when we shouldn't trade just simply because of our emotional conditions or our physical conditions. I drew this from another source, but we should explore the situation here, and I'm going to go through a little acronym. I equals illness. If you're sick, it's not a good time to trade because you're not thinking clearly. Are you on medications that would impair your thought process? Sometimes, you know, if we're on a pain pill, for example, for some reason, they have a tendency to slow our mental abilities down. S, do I have stress in my life? Obviously, trading is going to bring enough stress into your life without bringing other stressful items to the table. You need to evaluate yourself in this particular regard. How about alcohol? It's the holiday season. Am I coming to the table with a little alcohol in my system? That's going to impair your thinking process. Fatigue. I took a trade not too long ago where I was after a session that where I'd been working all day with clients, and one of the things that's beautiful about working with clients is you're talking about trading possibilities. All of a sudden you see good trading possibilities, and at the end of the day I thought, you know, I've got to get into this trade, and I got into the trade, and I was tired, and the next morning when I looked at the trade, I was upside down, and yet the wave I was looking at was positive. And what had happened is I'd actually entered the wrong market and didn't catch it. And it was because I was tired. And so we make mistakes when we're tired, and we have to be careful. And the last thing, of course, is what emotional problems am I carrying as excess baggage as I entered the trading room? Now you'll notice that this says, am I safe, or I'm safe. And that's an old aviation axiom that all pilots should go through prior to getting into an airplane. And so I think it's as important to traders as they enter the trading arena as it is to anybody else. You should do this before you drive a car. You should do this before you do anything that may have some danger involved. Now, there's not a lot of danger involved in trading outside of the fact that you can lose your money, and I find losing money is far more emotional and more disconcerting to me than it is in doing some of the other things like skiing down a steep slope or doing all of the other things that we do that adds emotional stress in our life sometimes. Using Elliott wave to identify trades. Why use Elliott waves? You know, the thing that I have found is that as we look through the different trading philosophies that are out there, and I've looked at many, the foundational tool basically for most trading applications is the wave. Everybody out there recognizes there is a wave. Now in this particular situation, it's been since about the 1930s that the wave has been around, and it has been tested through time, and it does work. There is a good little video, and you can look at it by just googling it on and looking for it. It's called History's Hidden Engine. It's a 60-minute video that is a real thought-provoking video that I think anybody that's trading Elliott waves should look at. You know, this wave, since Elliott developed it, has really not changed, except for a few clarifications. One of them that I can think of is that the title, for example, Elliott called an irregular wave, corrective wave an irregular wave, and has been changed to an irregular flat, I should say, and it's been changed to expanded flat for clarification purposes. And so the only changes that I've really found since the wave came out in the 1930s is a few words here and there that are changed just to clarify the wave. But the foundational principle of the wave is the same all the way through. It's a foundational tool used by all basic trading methods, and that's what I have found as I have studied this. Is it difficult to learn? It was for me. When I first started trading, I could recognize that there was some kind of a pattern where a wave seemed to go into 5 different sequences before it really started to turn around, but I didn't know why. The information that's in Elliott wave principles explains why, and we need to spend time studying that book. It's not a novel to read, but a real treatise in studying how the wave works. And a good understanding of the book and the principles in the book will help you develop the tools necessary to be able to trade the wave. It's very predictable once learned by the user. It's interesting, the clients that I work with, after they have learned how to use the wave, now are able to make profits and take money off the table and have very few losses. And I've observed this time and time again with the different people that we work with. Solutions. Use the EWP as the framework to identify your trading opportunities. It's an ongoing study, incidentally. Be prepared, but don't be surprised at any changes that may occur. Be prepared for the changes. Expect changes. Clearly identify 2 or 3 opportunities for each setup. And then as things develop, be prepared to eliminate those possibilities. Identify your responses to each setup. Remember, counting waves is an art, not a science. If it were a science, we could say in a certain condition that it would always be the same. But sometimes we recognize a condition as being the same, and all of a sudden a change occurs as a result of some unknown, and whereby it is different than what we really thought. It's interesting if you watch weather observations. We have all of the computers and all of the technology today to predict weather, and yet weathermen still make mistakes and are not accurate. But there was a variable that entered into the picture that they were unaware of. And the same applies with the Elliott wave. We can see certain conditions and we can predict the future to a certain degree of accuracy, but every once in a while a variable enters into it that we didn't recognize that changes the picture. And so therefore it is not something that we can be 100% at. Now, coaching helps you identify tradable waves through the rules and guidelines, find a place to enter the market through analysis, use supporting tools to identify trades and strategies, to develop confidence in your plans of action, and to be able to help you solve the missing parts of the puzzle to bring you success. At this time, I'd like to turn the time over to Phil Anderson.
Jerry, thank you very much. I always enjoy the opportunity to listen and to learn from you. It's a little wonder that you're very popular with the students that we have at Beacon that we're coaching through the Elliott Wave systems, and very well done. I want to introduce myself again. My name is Phil Anderson, and I am a program director with Beacon Learning Group. As Gordon mentioned at the beginning of this presentation, we're very proud to be an educational affiliate of Elliott Wave International. We are proud of the relationship. As we enter our second year, we have the opportunity to reflect on many of the successes we've had with students all over the world that are Elliott Wave International students. And I want to talk through some of what a couple of these students have shared in their own words as they've reflected on how coaching, Elliott Wave coaching through Beacon Learning Group, how it's impacted them. Lewis, who is a student that has been focused and disciplined and had great success, said simply, and you'll see this on your screen, I honestly have and am enjoying my time with Beacon Learning Group a lot. The resources, lessons, and help they provide are invaluable. I honestly recommend it to everyone. I had very little experience, knowledge of Elliott Wave. I knew the basics, but not enough to be able to trade. Now I can say with some degree of confidence that I can not only spot and understand patterns, but trade them as well. And his own performance in the market reflects that he now understands Elliott Wave at a higher level. Moving on to the next testimonial. Now, this is from Daniel Barrett out of Windsor, California. He said, thanks for the trading idea we discussed in our coaching session. I had a huge day yesterday. I had spent a great deal of time doing market replay and counting waves and patterns using the stochastic. I am using 3 time frames to get my bearings. I'm amazed at how well it does on every time frame. It really astounds me. I paid for the cost of Elliott Wave coaching in just 1 day. Thank you so much. Well, we appreciate Daniel sharing his success story with us, and we have many, many others where students of their own accord have shared their experience. Let's go ahead to the next point. A lot of people ask, well, how does coaching work? And what can I expect if I'm accepted into the program? And let me just speak to that point there. What does accepted mean? It means simply this. Coaching works when it's a good fit for the student, but it has to be a good fit for us as well. When it is a good fit, coaching, and I've seen this literally thousands of times over many, many years, coaching will change the trajectory of someone's experience relative to their goals. Coaching is about moving you in a way towards your goals that enables you to achieve things that allow you to reach those goals and even in many cases exceed them. Let's move on to the next point. Now I want to go through, I'm going to walk you through the pillars of coaching, if you will, and just explain how they work and why coaching may be an ingredient that you're missing in your own journey towards the financial objectives you have for yourself as a trader. Now it's kind of the timing of this, I think, is interesting, in that as we prepare to move into a brand new year, 2012, everyone on this call today, and we are fully loaded in terms of how many people are participating. The reality is we're moving into a new year, and invariably people are going to start talking about, well, what are my objectives? What do I want to change in terms of my trading performance? How have I done in 2011 specific to where I thought I would be in January of 2011? Well, again, we're at that point now where you're going to start setting objectives and thinking through, where do you want to be 1 year from today? And I want to talk through again the pillars of coaching so you can understand what it means to truly have a mentor, because that's a term, that's a phrase that's thrown around a lot. We understand, and I want to share with you our definition of what a mentor or a coach means, and why we believe, again, when it is a good fit, why it is absolutely a critical component towards someone's success. In fact, if you look at the most successful traders in the world, there's a common denominator, a common thread. Invariably, you'll find that in almost every instance, they had a coach, they had a mentor. They worked with someone that knew more than them, that was able to help them navigate through the process, shorten the learning curve, decrease risk, and move toward their financial objectives. Now, number one, clearly identify goals and objectives. Listen very carefully. What this means simply is that a coach is going to quickly assess where you are now versus where you want to be. You'd be amazed at how many investors we work with from all over the world, 45, 46 countries today where we coach students. And you'd be amazed how many students don't have a clear goal or objective other than to, many of you can relate to this, quote unquote, make money in the market. So a coach cannot lead you until they understand you. They're going to understand your financial reality now versus what you want it to be. In essence, they're going to see the world through your eyes, then gradually expand your vision to something much bigger than you can see on your own. Coaching is about paradigms. The definition of a paradigm is simply the lens by which you view something. We all have a lens by which we view the markets. We all have a lens by which we view movement in the markets. The definition of a paradigm, again, is simply a lens by which you see something. Well, I guarantee that in almost every case, the lens by which you view the market and the lens by which the coach views it can be completely different. Coaching is about expanding your vision so that you see potential when you look at the market. Now, the first commitment is simply to clearly identify what your goals and objectives are. Let's move to the next point, which really is very important. Now, develop and implement a strategic trading plan. Now, this plan is going to serve as a blueprint. It's going to serve as a roadmap. It's going to guide you safely through this entire process. This plan is going to ensure that you reach your goals and your objectives in the time frame you tell us, if not sooner. Now, as you know, there's a lot of ways to make money in the markets. Coaching is about identification of the very best process for you towards your objectives. Now, understand, coaching is not a get-rich-quick scheme. Coaching isn't designed to be easy. It is going to stretch you. We're going to challenge you. We're going to challenge every rule that you operate by, and in so doing, doors of opportunity are going to open that you will have missed otherwise. The best part of this experience, and many of you listening right now can relate to this, is you're no longer on your own. You're not an island on your own trying to figure this out. You've got a mentor, or as I'll explain in a few minutes, a team of mentors just like Jerry that are there helping you through this every single step of the way. The key to your success long term is to master strategies and then follow a specific plan. Mastery of those strategies will always happen quickest when you're working with someone who's already done it and continuing to do it, ideally daily. And this enables you to achieve your goals and objectives in the fastest time frame possible. Now, coaching is about accountability. A coach is going to hold you accountable to the plan. If you're getting off course, your coach is going to be there to firmly get you back on course and keep you focused. We will need that periodically. You're coming up again into a brand new year, 2012. The question I want to ask you is 2012 going to be different than 2011? I believe in large part you probably get to answer that question by the very fact that you realize you're probably going to have to do some things a little bit differently. And there's principles you've got to employ more effectively. Perhaps you're employing them, but not as effectively as you could be. Which leads to the next point. Go ahead, and we're going to move on. Is experienced coaches mentoring others? This is critical. Now, you can take advice from someone who understands it in theory but has never done it in practice, and that's certainly better than being blind in the dark. We would be the first to say that. There's a different element, though, that involves mentoring, true mentoring. It's working with someone who teaches you from their own real-world experience, having mastered it. And there's a key difference involved there. The reason that we are as successful as we are in coaching students from all over the world is that we coach from a perspective of experience. We trade. We are active in the markets. Again, we're not teaching you theory that we haven't applied in 6 to 12 to 24 months. We're active. Jerry is active in the markets. He trades using Elliott Wave, and he's an example of what it is that coaching is about. So understand that you have the opportunity to be coached by someone that has done it and is doing it day in and day out. And if the thought of that makes sense, and if you can imagine how that might benefit you, then perhaps coaching is something that you should seriously consider. Let's go ahead and move on to the next point. Positive results. Everyone says, well, what does that mean? What it means in a nutshell is you're going to measure your own success and progress by your performance. At the end of the day, you're going to measure the success of what we've taught you against what is the real-world experience you're having as a trader in the market. We understand that. Positive results. It's one thing to help someone to become book smart. It's another thing to help them to become market smart, which involves you understanding the markets and then your performance demonstrating that you understand the markets, that you demonstrate you understand the importance of a plan, that you understand the importance of accountability to someone else. And that's one of the key powers of coaching, is you've now got someone guiding you through this step by step. So positive results means just that. It means how are you doing, because ultimately you're going to measure, again, your success, not only the success of coaching, but your own success in the markets by your performance. That's really as simple as we can make it. We understand that, and we're going to measure your progress the same way. Let's go ahead to the next point. Customization of the entire learning process to me. Look, this is easy to explain, but it's important to understand. Everyone is different. We have beginners that are listening right now. We have intermediate traders that are listening right now. We have advanced technical traders listening right now. I don't care what level you're at, you're not going to outrun us. We work with people of varying degrees, but the point I want to make for those that are beginner through intermediate, let's say, don't be intimidated. We can help make this a process and a journey that you're very, very comfortable with. We teach at your pace and your level. If you're an advanced technical trader now, we can then adjust very simply this process so it matches the level you're at. People love this feature and this flexibility. You'll see an asterisk or a star there that says simply Traders Resource Line. Let me explain what that means. This is a tool that will become one of your best friends during the course of coaching. And it's really a tool that makes the coaching experience one of the most powerful experiences you will ever have relative to your journey towards your trading goals, your financial goals specific to the market. 12 hours a day, 5 days a week, literally you have access to the coaching team. 60 hours total. Think of that. 60 hours total. That access is unlimited. I'm not talking about email. I'm talking about the ability for you to schedule time, get a coach on the line as often as you want to help you as you look at and as you learn about Elliott Wave and how to use it effectively, as you look at the creation of a plan, as you look at proper money management, risk management, all of these absolutely key components. You have access to a tool 60 hours per week where we're available to help you. Think of the times when you've been trading and you've had a question where a tool like this may have just made all the difference. It's an incredible resource. You have the ability to call in, schedule time. In fact, in many cases, you'll be able to speak to someone immediately. A lot of our students develop a habit and a pattern of calling in and actually scheduling time. And guess what? We're not going to have you on the phone for 5 minutes and try and shoo you off. The average interaction between a student and a coach in this type of setting, the resource line, is about an hour, 1 full hour. Now, there's a lot more to this tool. In the interest of time, I'll explain how we can deep dive, as I call it, more on this subject of the resource line. But just know, this tool is absolutely, for many of our students, what enables them to really accelerate their performance in the market to a completely different level. And again, I'll explain how you can get more information on that resource line and everything that we're talking about here today. Let's go ahead to the next point. Final one, cementing the habits. Cementing the habits, like concrete. Cementing the habits. Now, this is critical. The coach is going to instill the necessary habits for you to become the investor you're saying that you want to become. Habits are the key to consistent success in the market. Everyone can have a lucky run where their account's up significantly in a given month. Anyone can do that. It's called luck. But how do you consistently average out your returns so that your averages move you towards your objectives financially that you've set for yourself in the market? Absolutely, having the right habits, systems in place are the key. They are the key to this whole equation. Now, these the ability for the coach to work with you and interact with you at a level that's going to enable you to really make sure that you do this for life. Because here's the beauty of coaching. It's not designed to make you dependent on us. Because invariably, initially, you may be dependent on us. But here's a fact. The reality of coaching is this. You will, at some point in the journey, and I can't tell you right now when, you will start to become independent even of us. And that's what we want. That's what you want. We want to put you in a position where you're fully equipped with the tools, with the emotional and psychological makeup relative to the markets, where you master and you dominate and you're able to achieve the goals that you have for yourself. It's that simple. And so cementing the habits is critical. I love a quote by Victor Hugo. Many of you have heard it. And the quote is simply this: there's nothing more powerful than an idea whose time has come. Well, our invitation is, as you prepare for 2012, as you prepare to take your own performance to the next level, Whether you're a successful trader now looking to jump to that next level, or you're someone who's getting started or an intermediate who's plateaued and you just want to jump ahead, I invite you to consider the year ahead and the fact that you're going to have to view and do and possibly think a little bit differently than you have in the past to achieve your goals. We have the roadmap. We can get you there. If you're coachable and you're teachable, we can get you there. And I'll repeat what Victor Hugo said. There's nothing more powerful than an idea whose time has come. And I believe in the old saying that might sound corny, but I believe it's true. My experience has taught me it is true. When the student's ready, the teacher appears. Well, we are here now. We interview for coaching positions to make sure, again, that there is absolutely compatibility on every front for students. We're going to bring up a question in conclusion, 3 questions in conclusion, and you're going to see that come up on your screen. There are 3 questions, as you can see them in front of you. If you're interested in learning about whether or not coaching is the right fit for you, if it is in fact that piece of the puzzle that you're missing, if it is in fact the extra push, motivation, whatever you want to call it, that's going to help you in 2012 to achieve your goals, to move you towards the objectives you've set for yourself as someone who invests and trades in the markets, then we have 3 questions I will ask you right now. Number 1 is simply, if you're interested in coaching, go ahead and click, yes, please contact me. And within a couple of days, we will follow up with you and we will answer any questions you have about coaching. Which leads to number 2. It's simply, perhaps I am interested in coaching, but I need more information first, which will be many of you. We understand that. Go ahead and you can click right now, put your cursor in one of those boxes and simply click, and we will receive that information and we'll follow up to answer the questions you have regarding coaching. And then the 3rd option is simply no, not at this time, which is okay as well. Now, again, number 1 is yes, please contact me. Number 2, maybe, but I need additional information first. And then number 3, that 3rd option. Go ahead and click on the one which best describes you. Now, I have the privilege, and a part of what I do and the reason I love what I do working with Beacon Learning Group is as a program director, I get to track and monitor the success of the students that I interview. I have the distinct pleasure of having what I consider to be friends, traders, investors all over the world as a result of the discussions I get to have with people. And when we find that it's a good fit, we then extend an invitation to that student, and then the student, if they determine it's a good fit, we then begin the process and put them in an environment where they can once and for all succeed and where that success can be permanent. We invite you to really consider your own future, your own objectives. There's absolutely no doubt in our mind that when coaching is a good fit, it can be the difference that will catapult someone towards their objectives. We have seen it thousands of times, quite literally. And so on that note, we appreciate your attendance here today. We appreciate your focus on your own objectives. We appreciate, as we move toward a new year, that this is an opportunity for you to step up to the plate for yourself and to really commit to your own goals, to your own objectives, to your own financial objectives as you've set them for yourself. And we look forward to continuing this discussion, and I would love nothing more than to have the opportunity to be able to watch you as you take your trading to the next level. So thank you very much for your participation. Jerry, thank you very much for all that you do and for who you are. I think for those listening, you can get a sense that with Jerry, he is quite simply a wonderful guy. He's a great trader, and that's important. He's an incredible educator. He's had great success himself over many, many years as he's been active in the markets. But I don't want to lose sight of the fact that he's a good man, and so I appreciate the opportunity to work with Jerry and the other coaches, Gordon, who introduced us as well. We wish you the very best for a happy holiday season. Thank you very, very much.